For the first time in history, WTI crude oil dropped to a negative price of -$38 per barrel. That means if you went to refuel your car that day, the gas station would have to pay you for the fuel. How crazy is that? So in today's video, we will be investigating how I managed to yield an exceptionally high one-time profit off of an oil stock with a rather unusual technique, which is based on Ray Dalio's concept of the economic machine. If you want to see a separate video where I fully explain this method, leave a comment down below and click on the pop-up banner to cast your vote. Today's video is more about my train of thought and my resulting action during the biggest crash in the stock market, as well as a direct comparison between the performance of two stocks. Finding a stock which yields high profits during the current crisis is very difficult, especially since many opinions of investors are split and no one really knows what will happen next. And that's where the method I used comes into play. Greetings everyone and welcome back to Stockminer. So it all started the morning I woke up and read the following article. WTI crude oil crashed to a negative price of -$38 per barrel for the first time in history. Here's a simplified chart of the oil prices during the past 12 months. Before the crash, we traded $70 per barrel. The coronavirus caused a price drop to $20 a barrel. That's a loss of more than 70%. Now, let me ask you a question. What is the most demanded good on the planet? Which raw material defines our age? Well, it's certainly not the lithium for the Tesla batteries, not yet. But how about oil, the black gold? We created a dependence for oil. Nearly everything we invented requires oil in some form, even if for the production. Now, oil is probably the most predictable sector of stocks. If you think about it, every oil stock is depending on the oil price, and the oil price depends on supply and demand, the economy. So if, because of the coronavirus, no plane is in the air, all ships are in port, there's a lot less traffic because everyone's working from their home office, and all the factories are shut down, the economy suffers because the worldwide demand for oil decreases. That induces pressure on the oil prices and results in stocks losing their value. I hope you caught my drift. So at some point the economy has to pick up again, and if planes start flying, ships set sail for the ocean, and factories start running, I have to own some oil shares. But which? So the next step for me was finding my oil stock. I chose to invest into the Occidental Petroleum Corporation, in short, Oxy, and I'll show you why. Now, Oxy isn't the biggest oil company with a market capitalization of $20 billion. The oil giant ExxonMobil has a market cap of 184 billion US dollars. That's 9 times as much as Oxy's. Oxy is neither a high-paying dividend stock with an annual return of 0.2%. ExxonMobil pays 40 times more dividends with 8% of annual return. So why did I nonetheless choose to buy Oxy? Take a look at this chart. In red, you can see the share price of ExxonMobil. During the crash, the oil giant lost 46% of its value. And now look at the blue graph. It shows the stock of Occidental Petroleum. Before the crash, we traded at $47. And here's the reason why I decided myself for Oxy. This energy stock crashed to $9.70. That's a loss of value of 80%. I mean, it's not every day you see a multi-billion corporation lose 80% of its value in just a couple of days. A company of that size is, as you say, too big to fail, or it's very unlikely that it will not make it out of this crisis because of its economic value. Since I've seen this as a unique opportunity to earn a decent profit without big effort, I chose to invest a larger amount of money. I built my first position at just under $10 and I bought 1,150 shares. Since I'm very confident about this stock, I increased my position in the second wave of the coronavirus, where the stock pulled back just under $9. The stock developed itself fairly decent because of the support of the vaccine, but it's nowhere as close to its full potential. Now, under the assumption and my full confidence that this stock will break through its 25-week high, we are looking at a profit of about 470%, whereas if you would have invested into ExxonMobil, the profit would have been not even half of that, with 220%. Oxy pulled back just under $20 because of the recent news. Tesla will take its place in the S&P 500. So investing into Occidental now would give you the same profit as if you would have invested into ExxonMobil a year ago, just right after the crash. I simply rely on our historical dependence for oil. Therefore, I see it as an easy and safe profit. Also, if you already own Oxy and you want to be up to date according to the latest news, or you need some more conviction, feel free to check out the YouTube channel from Bester Investor, also known as Mr. Oxy. He knows a lot about this stock and is overall a very honest guy. So without a doubt, every mathematical research would have shown that ExxonMobil would be the safer and more profitable stock to choose from. But by applying this rather unusual method, the choice for an exceptionally high profit fell on Oxy. So let me conclude this video. I wanted to show you guys that sometimes an unusual technique beats the mathematical research. Sometimes your gut beats the opinion of the majority, and sometimes you just have to push your idea through and focus on one personal goal. Like mine, I never wanted dividends and was never hoping for Oxy to be the next 10 bagger. I simply wanted to make an exceptionally high, one time profit off of the biggest crash in history. To be honest, it was all about being a part of this, of being able to say I was greedy when others were fearful, and it paid off, and it was fun. So, with that being said, I hope I gave you guys a different perspective according to the stock market. A stock market without too much numbers and digits, but rather with a historical or logical reason. Like I said, if you want a separate video where I fully describe how this technique works, let me know. I'm trying to find a balance between my personal experiences, like I said, my gut and my technique, and the current situation on the market, the impersonal, calculated, and economic point of view. Therefore, I'd be happy hearing about your opinion, overall ideas, questions, or tips. Thank you for watching. I hope you enjoyed. See you in the next one. Bye bye.